Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, here's something that may be new to some of you. We have in almost any single platform that you use. It doesn't matter what company, what trading firm you deal with. If they offer a charting software package, one of the companies that you're going to see that I'm using today is from Thinkorswim as an equity stock option and stock equity firm. Now, they have a wonderful charting package. And you can show any other equity firm out there that offers a charting package. You can change the default input of what you want to average. In other words, you don't need to do every charting software package uses a default of the close. Some companies, as soon as you put up a moving average, they have two moving average values. The first one will be a 20-day, the next day will be 50-day, for an example. Some companies have a default of possibly a 5-day and a 10-day. All right, so you know you can change the days or the amount of time that you want your data to be averaged out. Hopefully you all do that, right? Because some markets are more responsive to different dates and time periods than others. Well, you can also change the parameter of the input value. You don't have to use the close. You can take a moving average of the highs. You can take a moving average of the lows. You can take a moving average of the close. You can also take a moving average of the opens. More importantly, you can do more complicated things like take the average of past ranges, and you can take, as it's italicized, the average of the typical price. High, low, close divided by 3. And that is what we define as the actual pivot point, by the way. So if I take today's high, low, and close, average it out, divided by 3, it's going to give me what tomorrow's expected typical price or pivot point or mean price will be. Volume you can use as an input to average out. I can average out what the last 20 days average of volume is, or 10 days. I can also take an average of what volatility measurements are from the VIX, VIXIN, and VIXO. All right? So there are several different ways to identify the direction of trends with moving averages. We look at not only the direction and of the moving averages. Are they sideways? Are they pointing up? Or are they pointing down? The location of price to moving average, which is very important. We're going to discover that today and discuss that. And the crossover points of interest when you use multiple moving average studies. There's a simple rule of thumb, and one that many people have devised and developed a foundation of a trading system based off. If a moving average is rising and prices are above the moving average, the trend is considered up and they go long. But now here's a term for you. What would you define as a price? So when you read the first simple rule of thumb, if the moving average is rising and prices are above the moving average, what does prices mean to you? How many people think it means just the close? Raise your hand. How many people think it means the real body relationship that is illuminated by candle patterns, which the real body, once again, is the relationship of the open and close? That's also prices, isn't it? How about the entire range? That's prices. What if the entire range, the high, the low, the open, and the close? How about if all four main components are above the moving average? Boy, that would absolutely give us an indication that prices are above the moving average, right? And in times, that's probably more important to watch, whether the entire range is above the moving average for a more bullish or stronger buy signal. Any moving average you use, if you use a simple moving average, a 10-day based on the close, I'm talking about if that moving average is rising and if prices, whether it's the close or, as I would like to show you, if it's the entire range, or more importantly, if it's the open close, if a market opens above a moving average and closes above the moving average, and the next session, same thing happens, we have a more stronger confirmation that the market trend is rising. So simple rule of thumb can be actually explained in a more clear, concise manner as I've just described it than just reading this slide. The opposite is true if the moving average is declining, if a moving average is going down, and if prices, so again, define prices, because not many people do. They just say prices, and many people assume it's meant to be just the close. But if you look at any moving average value, and that's the key, to look at price to moving average relationship, and let me define that. If you have a moving average, and if it's moving up, and if the low of the day taps the moving average as if it's a support, then the entire range is literally above the moving average value, correct? That means prices, all prices, the open, the high, the low, and the close, are trading above the moving average. Boy, that gives you a little bit more confirmation that we have a stronger bullish market intact. And now the opposite is true. Instead of a market just closing below a moving average, and some people says, look, it closed below the moving average, it's bearish. And another day or two later comes back and the market snaps back up and just, it was a bear trap. Everyone got short in the hole, and now the market's taken off without you. A better indication would be look for the entire range to trade below the moving average value. The moving average is pointing lower, and now the high of the day, each consequent subsequent bar is acting against the relationship of the moving average as a resistance level. And that's what we mean by there are several ways to identify the direction of the trend with moving averages and the relationship of price to moving average values. So, as I was describing, there's an additional filter. One thing that I teach at nationalfutures.com, Steve had asked how I got into the educational field. First off, I am an independent trader. I trade actively. I trade stock options, futures, and foreign currencies. I also write a newsletter and advisory service. So I'm kind of a busy beaver. But one of the things that I do, and I teach my methodology, is that we like to look at everything we have at our disposal. And everything we have at our disposal, you have equal access to. One is the main four components, the open, the high, the low, and the close. It's printed in the Wall Street Journal. It's on your charts. It helps constitute a bar chart. It helps constitute the construction of candle patterns, and it's there for a reason.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.